Good afternoon, everybody. Yeah, there is a trade that we entered yesterday, which we have been making some profit from on Bitcoin. And I would like to share some ideas with you on how we have managed to enter that kind of position, that kind of sniper entry. So I would like to share my screen with you guys so I can put you through how you can also enter that kind of trade in case you see that kind of trade in the future. Yeah, here in my screen we have Bitcoin on the chart. We have a Bitcoin on the chart. This is where I entered from. So I bought a position from here some time ago, which I shared to you guys on my Instagram account, where a lot of people, entered from there, took some profit from, after we find out that this is a fake out. Whenever you see fake out means it's just it comes in here to gather more liquidity so that we can pump price up. That is why we entered the position from there. And that's not the case here. This is where we are focusing on this double bottom. Double bottom entry means, when price pumps from here, touching the 200 moving average here, price failed to go above that zone area. But now we now have that price coming back here to retest this trend line. And in the past, if you look at the trend line, it has not been broken before. So, and according to our trading strategy, says that whenever a price has been broken, it's likely to come back for a retest and continuation. Yeah, from here we broke above with this big bull candle, with this big industrial candle, and now we came back for a retest. This retest couldn't hold very well, and then the retest came down again. I was thinking maybe price will break back below this area, and then price will dip a little bit. But looking at it very well, you see that price has been trying to find support from here. This is why I drew out this demand area, because I see that we have pushed out of this push phase, and then we are now at a zone where price is likely going to push upwards. Now, that is where this big this movement comes in. Let me try to zoom it so that you guys can see it's very clear. That is where this movement came in place. This movement where we have a double bottom. Now, our double bottom entry, this is why you need to train yourself enough to know this kind of zone, because they are a zone that are very active. If you look at it very well, you see the price tried to support from here, but broke below it, and then this fake out happened and price tried to pump into it. Then we have this reversal hammer candle. Reversal hammer candle, push this lower to this daily demand area where price has been, actively pumping from there. So price came back there and formed a bullish engulfing candle. Like I said, it is the reason why we have to enter this kind of position. And now a double bottom, you see, looking at this double bottom is a very perfect double bottom, because price touched this particular zone and then price came back again at that region before we saw this indecision candle with this continuation candle. And this itself is a reversal candle, which indicates that the liquidity that is, a lot of sellers that are selling from here, they do not have the power enough to break out of this zone, because once this indecision candle opens, the next candle was supposed to continue the trend, which means that they are still selling, right? But immediately you see this price pumps from here, it couldn't be able to get into it, which formed a clear double bottom. And after a double bottom, you would like to find your entry. This is why we have to enter this zone after this bull candle, because if you look at the bull candles very well, you see that the bull candle doesn't have a wick at all, which is indicating that the price is at a very strong buying pressure. If you look at it very well, you see immediately it opens, price pumps up and then closes. Then we have this red candle which is trying to engulf it, and we have this final engulfing candle with this indecision candle. Now immediately we see this indecision candle, I know that this zone is going to hold very well. That you see the next candle comes in, this one came back for liquidity grab, pumps a little bit. There's a lot of fight between the buyers and the sellers from there. Then we have this final candle here, this final candle indicating that, yeah, perfectly. We are going up, we are going higher. And we have this retest of this high that has been taken. Sometimes we know whenever price pumps up, it's come back for a retest and continuation retest, now. A big bull continuation there, which I'm very glad that I could be able to take that entry, and I shared it with you guys on my Instagram and even on my WhatsApp. I was able to share this so that everybody can enter the market yesterday. Now, the what we have here is we are now at a zone whereby we have taken out this high, which means we are not currently on the downtrend. We are now trying to move the trend back to an uptrend. And if you look at it very well, my 200 moving average has been broken with this big movement here. If you look at that movement very well, my 200 moving average broken. So I believe in the future we should have a break of this zone. If not, we will come back for a retest of this 200 moving average and this possible demand, because it has been broken. It's likely going to hold for a demand. And again, it acts as a resistance in the past. It is likely going to hold as a zone where price is supposed to support from. And if not, price could dip. But to my own analysis, I believe that price should pump from here to give us another high, which is higher than this previous one here. So that is pretty much it, and that is how to enter double bottom entry. Like I said, double bottom entry, price came for a liquidity grab, pumps a little bit, and then come back and close with a bull candle, which is indicating that this zone is very strong. So it's before you could try out this strategy, I would like you to backtest your strategies. I don't know what you do. I don't know the kind of trading approach you have to the market. But as for me, I'm a trend trader, and I like trading with the trend. And I like trading with price action. Sometimes whenever I need my moving averages, I put them on my screen if it is needed. Like here, we have the touch of this 200 moving average. This is where some sellers come in. Your touch of more 200 moving average with this bearish move indicates a weakness in the market, which indicates that in the future you may have all these sells. If you have been around well enough, you will know that I've always been talking about a big movement that always occurred after touching the moving averages. There are so many moving averages out there that you can use, depending on what kind of time frame you are trading. Now, I hope you guys could be able to learn from this video. I'll be calling some other trades in the future where we'll be explaining how we have been entering the market and how, in the future, so that whenever you see that kind of entry, you'll be able to enter from there. Have a lovely day, guys. I'll see you in the next video.